Let's get back to our featured guest, Chris Lowe, chief economist at FTN Financial. Chris, we'll save the question of whether you're going to buy an iPad for yourself for another time and get back to the Fed for a moment. We did have a dissenting member this time, Thomas Honig. How significant is that, and when's the last time we did have a dissent?
Well, it's been quite a long time. It is significant. It's significant. Well, first off, look, it's Honig. Honig has always been hawkish. He is more cautious about inflation than the other members. But I think it's significant for a couple of reasons. First, this is the first step towards warning. We know there are some within the Fed who would like to start moving toward tightening sooner rather than later. It's significant also because it's a reminder that the economy is in better shape. It's standing on its own feet now. We don't necessarily need all of this support. I would also add that all of that other stuff that Lindsay was talking about, the end of some of these liquidity programs, including the term auction facility, all of that is tightening too, because we're doing away with quantitative easing, and the Fed is no longer providing the liquidity to the market that it was before. So we've already taken that first step towards tightening.
Chris, might I ask, as you know, Chairman Bernanke facing that procedural vote in the Senate on his confirmation for a second term, how is that playing? How's that back and forth playing?
I have to tell you that as an economist, more than 20 years, I've never, ever thought the Fed was politicized. I don't think they're making policy decisions for political reasons, but I certainly do think they've tempered the commentary. The Fed is very cautious. It's not just about keeping Bernanke in his job. It's also about keeping the Fed's role as a bank regulator and keeping the Fed's independence to make monetary policy decisions without the oversight of Congress. I imagine these are very much on the minds of policymakers right now.
Chris, got to ask you about the mortgage-backed securities. The purchases are indeed going to be ending in March. What is that going to do to the economy?
I don't think this is going to have a big impact. The mortgage spreads did tighten in when the Fed began buying securities, but not any more than other spreads. Look at corporate bonds, for example. Those spreads tightened up a lot, too. So it's hard to say whether it was the Fed necessarily or just the fact that the markets were healing that brought those spreads in. Either way, I think what we'll see is that spreads might widen 20 or 30 basis points, and then I suspect they'll come right back in again because private investors don't own mortgages right now. They're short against the index, and they'll have to cover that short or risk underperforming. So I think it will have a limited impact. I'm much more worried about the end of the first-time homebuyer tax credit in April. I think that will have a significant impact.
Chris Lowe, chief economist at FTN Financial, joining us on this Fed Day. Chris, as always, thank you so much. We appreciate it.